Welcome back to Crypto Clarified, the podcast where we break down the fast-moving crypto landscape and what it means for investors. I am Davila Shlinskite, and I'm responsible for digital asset research at Wisdom Tree Europe.
And my name is Vin Tran, responsible for business development at Wisdom Tree Digital Assets.
Today we talk to Andrew Knupfel from Cardano Foundation. And the discussion is really eye-opening because Cardano is involved everywhere, both in the real world and in crypto space.
Hello, Sandro. Welcome to Crypto Clarified.
Vin, Davil, it's a great pleasure. Thank you a lot for having me. Great to be here.
Absolutely. And it's only been a couple weeks since I last saw you at the Wisdom Tree Run Club down in Miami. So it's really good to see you again. I know we had a very easy run, but the heat can get crazy.
I think that's kind of a nice analogy, right? It seems like an easy run, but there are always some factors playing in. And it was the heat for me coming from Switzerland, Zurich to hot Miami. You need to adapt a bit, but it was amazing. And thanks for organizing this. Great time.
Absolutely. So talking about heat, let's start on a different note with some hot takes, some lighter, fun questions. One, what is the most overused word in crypto today? Buzzword.
Tokenization.
Oh. Okay. Next, then this is rapid fire. If you had to explain Cardano to your parents in one sentence, what would you say?
The future of the internet.
Okay. And then there's the last one, I swear, and then we get back to business. But outside of crypto, maybe inside, whatever it may be, what is something that's really inspiring your thinking lately?
The control and the ownership of my data and my assets as I'm used to deal with it today and how the future may look like.
Awesome. Thank you.
So after this rapid-fire question, I will switch to more serious ones. The most exciting thing for me is as I travel all across Europe, and especially when I go to Switzerland, I see SPAR stores, and maybe mispronouncing the name here is SPAR. And I know that recently you made it possible to use Cardano for payments within those stores. Can you talk us through that partnership, what it shows, what it illustrates, what functionality it relies on?
Yeah, I'm glad that you actually saw it. It's great to see that it also made the way not only within Switzerland, but a bit across the border. Spar, as you pronounce it accurately, is a grocery store here in Switzerland. So it's a store. They have a couple of hundred stores amongst the country. And what we realized is that we always talk about this real world usability and adaptability of blockchain and crypto. And one of the things is for all ADA holders, expanding the usage of ADA besides DeFi and the things as we know it to be used. It's also how can you introduce it into your day-to-day life. And obviously, the best thing would be if I could just do my grocery purchase with ADA. Hence, we collaborated with partners, which is DFX for an on-off ramping as well, to enable which bar together an environment where you can go to the store, and instead of tapping your credit card, you can tap your wallet, and you can pay directly with your wallet and ADA. The conversion behind happens, and the beauty here is that for the merchant, it's much cheaper than when you pay by credit card. So when we have other solutions, the spread and the fees are often much higher than they are with the solution we provide now. So it's kind of a win-win situation for the ADA holders, but also for the merchant who has kind of a more efficient and cheaper way to interact with crypto today.
This is a really great example of real-world use case of blockchain. But what was the moment that blockchain clicked for you? Because you have spent so much time in traditional finance. Like, what made you convinced that getting involved with Cardano, working on all of this is the best way forward?
Yeah. So as you correctly said, I spent 20 years in traditional finance, most of it in investment banking and infrastructure banking. And it was around 2015-ish, 14-ish, when we looked into how can we expand our asset classes and our offering, and we touched Bitcoin. Back then, it was a bit for the board too risky to add it for a regulated bank into the service offering. And then I was working also with the Swiss Stock Exchange and Security Service company, so SIX was doing the Swiss infrastructure. And then we introduced STX, the Swiss Digital Exchange, in 2018. And I digged more into the rabbit hole of the tech with this blockchain-enabled infrastructure. And I realized that we are in this transition, in this paradigm shift from Web 2, where we have, like in the early 2000s, we had this big data topic, and we have to see that this data kraken coming up, and we are living in this centralized world where we have so much dependencies, where I saw, oh, there is like the first time where I see that the technology truly can expand beside crypto into the real world, into social and financial systems to create faster and more efficient systems by also giving back control and ownership to the users. And that was kind of very inspiring to me. And then it takes you a bit of time to go really into the trenches. And Cardano provided the most exciting vision and technology, in my opinion, and that's why I joined the foundation in 21 to drive this adoption amongst different industries to provide a better environment.
I can really appreciate that. And then building off of what we just talked about in terms of real world use cases, you mentioned Cardano being a differentiator from a blockchain perspective. Can we double click into that and can you tell us a little bit more about why to Cardano? What makes it different? Is it governance? Is it technology? Uh, what is it to you that makes Cardano the standout blockchain?
It's a bit both of it, and even more. It's about this focus that we don't follow or push a hype, but we really look into the infrastructure piece. So it's all about trust, transparency, identity, and governance. So when you speak about the tech, it's first security, decentralization, and then we are following scalability. So first, you need to be resilient and robust. That's how critical infrastructure rely on. Then when you speak about governance, we always speak about this decentralized platforms and protocols. But when you dig a bit under the hood, you often realize that it's not as decentralized as it should be. And hence, governance becomes very critical. And this is something which Cardano always had on top of its roadmap to be truly decentralized. And we introduced a new constitution last year where we have this member-based organization where everyone can contribute into the future development of Cardano. And this is for me truly exciting to see how enterprises, governments, individuals come together and build a future world based on the technology.
And I think that's a really good point. The decentralization side of things you mentioned. I think for the listeners and the viewers that it might seem a little bit more, abstract because the idea of decentralized is another buzzword that we talked about earlier, right? So what does that really mean in practice when it comes to managing a foundation like Cardano Foundation, right? We're talking a global foundation, we're talking working with institutions, working with retail. How does decentralization really work?
It's about having or building, supporting the frameworks to have a resilient infrastructure. So when you think about Deauville earlier this year, we had, I think it was in Spain, if I remember correct, a huge power outage. We have seen a lot of problems with AWS lately, as an example, on the cloud servers, where suddenly industries lost connectivity. So when we speak about decentralization, we have to think about how can we create an environment which is not dependent on a region where we can experience a power outage into a finance or into an infrastructure piece like cloud service providers, where suddenly the whole industry kind of stand still for a while because we have these dependencies. And this can be an IT bug, this can be a regional attack. We see and we experience it ourselves. Cyber attacks happening around the globe and around like every couple of seconds and minutes. And the way to prevent it is to have this decentralized or DLT technology where you use different providers and supporters which maintain the network independently. So when you think about a simple ledger where I write the rules and I give you always a copy, I write the rules. If my ledger, whenever I route, automatically updates on your nodes, and when you update, it's on my nodes. Then we have like this system where we can all contribute and secure and control each other as well, who is doing what. And in a simplified way, this is where we go with this decentralization. So taking away decentralized parties, which often work in the background as well, and open it up to the broader society to also contribute and verify as well. That's also a very crucial aspect here.
Yeah, that's really interesting about almost the idea of removing any single point of failure, right? And diversifying that. How do you balance decentralization then with ideas of regulation, but also adoption when there's so many moving pieces?
This is a very good question, and I think this is also one of the big question marks we have seen over the last years. Why have we seen blockchain adoption maybe not as fast progressing as most of us would have wished to see, right? This is about global frameworks, global standards. So we need to plug into the existing world. That's a very crucial aspect. I give you an example on how this could work. So we, as the foundation, what we do is we put our financial statement, our balance sheet, the income statement on the Cardano blockchain. So we make it accessible for everyone to look into, which is kind of a nice way to do or to make it transparent. But it doesn't really solve a problem in the traditional sense or in traditional worlds. So in the second step, what we did, we worked with our auditor, which is Grant Thornton in Switzerland. And Grant Thornton did an audit on our architecture, and they looked into our on-chain transactions and made a cross-reference with our ERP system. And they did an on-chain attestation. So what they used is they used an AI-enabled tool to not only do a spot check, but they checked each single transaction. And then they made an on-chain attestation. So they cryptographically signed on-chain that our financial statement is attested. So this is like a proof you can verify, but now the problem is how do you identify that this really is Grant Thornton, which made this attestation, and the Cardano Foundation, which uploaded this data. And to achieve this, we have an identity solution, identity layer, which utilizes the VLEI, that's the verifiable legal entity identifiers, and the LEI, in a common sense, is what has been introduced post subprime crisis. So the G20 and the Financial Stability Board, after the Lehman Brothers collapse, they said one of the big problems is we don't know the exposure in the market amongst the different legal entities of Lehman Brothers. So they introduced the LEI, that in the reporting schemes we have in the traditional world, they can measure what is the whole exposure towards one company, right? An umbrella structure. Obviously, there are much more use cases behind it, but a bit to simplify it here. And the VLEI now is the next edition of the LEI. So it's the verifiable legal entity identifier number. And our technology is built with the same technology to apply VLEIs. So this allows us to plug into the traditional system. So the Cardano Foundation has a VLEI. We upload the data. You can look into the data. You can see that there is an attestation. And to the VLEI of Grant Thornton, you can also verify that this attestation has been done by the Grant Thornton Switzerland legal entity. And now you plug into the real world, because this is an audit, or you can do an audit in a couple of hours rather than days, right? You can actually improve this very, very fast. You can plug this into NAVs when we speak about funds. You suddenly can drive the whole operational process much faster and secure as you can verify it. So having it only on a decentralized system doesn't solve a problem. You need to plug it into the real world. And VLEIs, as an example here on the reporting, is how we solve these problems. So it's a lot about standards, it's about legal frameworks to actually plug it into the system to have a public permissionless blockchain as a trust anchor in today's world.
Fascinating detail. It's incredible to see developments like this. Going back to diversification, just to highlight to the listeners, when you talked about not being reliant on a single geographical location or a single IT system, for me, this clicked quite clearly, because when we manage crypto exchange traded products, we also do everything we can not to have any single geographical, human, IT dependencies. Everything is always diversified to ensure the security, because You can't rely on any geographical location, any individual, any computer operating all the time just because of everything that's happening in the world. But now going back to where we started off this discussion, you talked about SPAR partnership, relationship. How does Cardano ensure that your partnerships actually go beyond PR announcements? Because there are so many things that are announced in crypto space, but your partnership, no, I can actually walk into grocery store and I can actually use ADA for payment. So it's actual partnership. So how do you enable this?
So I think you mentioned something important again here. There are a lot of announcements when you look into the broader industry. We try to not live from announcements, but from real deliveries. So hence our partnerships are specifically built in a way to only announce it when it's practically applicable. So when we speak with partners, we build solutions together. We conceptually design them with also service providers and distribution partners, and then also let them do the work. I give you an example which goes next to maybe Spar, which is with a company called Serviceplan-Gruppe in Germany. It's one of the largest marketing agencies in Germany, but also the wider Europe. And what they did is they detected a problem with their AI agents. So they're serving all the large companies and small and mid-sized companies. They deploy AI agents and they realized, hey, in the agentic AI setup, they speak against to each other, but they cannot verify. Am I speaking to Vin? Is it a true Vin? And is Vin actually also entitled to share this information? Like in a corporate, right? Everybody has their role, they have their competencies. And if you now have a fake AI agent in between who shares information with you, you busted because you don't have accountability. So what we did with them, we built a platform called Masumi.network. So they built that, right? And they are operating it. There you can deploy an AI agent, which in the engine room receives a digital identity. They have so-called verifiable credentials. They can verify if on the one side, the data shared is correct, and also if they're entitled to do it. And they have a payment rail with the stable coins. Then they also have kind of a marketplace where you can hire and rent AI agents for certain tasks. So now in an agentic AI setup, an AI agent can hire Deauville for a certain task and Vin for a certain task, and then they can monetize each other. And this runs extremely well. They onboarded last year around 500 new enterprises, and amongst them are large enterprises like BMW, Lufthansa, and others. And they do not necessarily know that their AI agents run on a blockchain. That's the beauty. Blockchain, as I mentioned then before, it's like from the internet, that's like the trust layer, the trust anchor, and people are deploying on top of it. So it's in the engine room. And here we have like someone like the Serviceplan group who can distribute it and not only deploying a solution, make an announcement, but they can offer a true value towards their clients. And this is how you can scale them with the right partner. And this is the same when we speak about Spar and also the partners involved in the on-off ramp, how we can scale this amongst other merchants and stores also outside of Switzerland going forward.
Incredible. I look forward to seeing more and more applications in real life. But this is very much a partnership between Cardano and real world players. How about you increasing interoperability with other blockchains? For example, I'm noticing that you are doing more together with the Ethereum Foundation. Would you mind talking about this?
We are in constant exchange with multiple different protocols. Layer ones, it's one of the core elements when we look into how the world works today. It's very fragmented, right? And blockchain shall be kind of a universal solution where we break into this interoperability problem. And it's essential that we work with them. So we have bridges with multiple different layer ones. But what is important is that we bring them together for common frameworks. So one of the frameworks you're working on or we see is the risk mitigation framework, where we, on the one hand side, utilize partners. That's through the GBBC, if you're familiar, that's the Global Blockchain Business Council. So the risk mitigation framework is a proposal or highlights the risks in tokenization. And there is DTCC is involved, Euroclear is involved, but then you also have the Aptos Foundation, Cardano Foundation, so multiple blockchain foundations and industry bodies from the real world coming together and building these frameworks, which now is being shared with regulators to build the frameworks for a mutual a platform going forward. Because when you look into solutions like what Swift is doing, as an example, right, or what DTCC in the US is going to do, they will become an orchestration layer, and they will utilize multiple different blockchains depending on the needs of their members. So the interoperability piece is something we're looking very heavily into. It's a bit difficult, and I don't want to go into this too technical, but there are certain elements which are different in blockchains. Like, we are not an EVM chain, so we are not a Ethereum virtual machine chain, right? We are using a different accounting standard, which is unspent transactions, and hence there are certain requirements we need to look into. But then you have partners like Wormhole, Layer Zero, Chainlink. So there are partners out there who help to bridge the ecosystems together and enable these large entities to deploy on multiple blockchains. And this is where we have a lot of conversations with these interoperability players and the foundations themselves to also align a bit the strategy.
This is incredible discussion because you are opening eyes, my eyes, and I'm sure our listeners' eyes, for how big of an involvement Cardano has both in crypto space and in real world space. But is there anything else that's happening within Cardano that we haven't seen yet, that you are working or putting a lot of effort on trying to develop?
Yeah, now it depends a bit on which industry you want to go, right? So there are multiple aspects, as you can imagine. This technology touches so many different industries. There is a lot being worked on right now. A lot of it happens in the educational space, as an example. So what we do is we host masterclasses with governance, with enterprises, to first of all understand what blockchain is, because for many people, blockchain still is the narrative, it's crypto. And that's it, right? And blockchain is so much more. So we help people to understand how blockchain actually help businesses and regulators to build better frameworks. And as an example here, we work with Petrobras, who you might know. It's Brazil's largest state-owned state-owned energy company, partially state-owned. And what we did with them is we built a masterclass in their experience center, and they reach over 40,000 employees over time to educate about blockchain technology. So going away from the common narratives, but really into how can we change operational processes, how can we increase compliance requirements, how can you become better. And this is what we do with different enterprises. Then another thing which many people do not see is obviously the work you do a bit behind the scene from a technical perspective. Maybe to this audience as well, you may have heard a bit more what is happening in the traditional world, right? And when the Securities Exchange Commission granted this non-action letter to DTCC, one of the things they mentioned is that an asset needs to be still controlled. So it cannot move amongst multiple different wallets of jurisdictions, and you need to have certain control mechanisms in place. So usually how this works is with smart contracts, or you have programmability. Smart contracts often are also kind of an attack vector or have certain vulnerabilities. And in the background, what we are doing on our technologies, we are working on native programmability as an example. How can you create the more secure way to comply with these requirements? So you have programmability natively on the ledger, but also complying with these type of requirements. And this is a lot of work happens a bit in the background. People don't see, because on one side it's too technical. And I think that's the problem we have in this industry. We need to bridge into a more in an environment which is better and easier to understand. And that's why I liked this Masumi example with the AI agents. You need to have a solution you can deploy, which provides a benefit, and blockchain is the trust anchor underneath. And this is what we are doing and how we position Cardano there as well. And then maybe as a last one, we are working very closely with the United Nations, and one of them is the UNDP, so the United Nations Development Program. And when you look it up, they have a paper released, I think it was in January, which is called New Tech, New Partners, where they highlight some blockchain practices they have. And when you look at this snapshot, Like out of 42 projects, 21 are with the Cardano Foundation and the Cardano broader ecosystem. So we are doing a lot of work behind the scene there to help them optimize their processes. And one of them, as an example, is again on the identity side, where we utilize our identity solution called Veridian. And what it is with so-called civil social organizations, CSO, civil social organizations, they are called. When you go into a crisis zone, what usually you have a civil social organization, which is entitled to receive goods and distributes them. Now, the problem, and we have seen this lately at Gaza and so on, how do you verify that the shipment goes from the logistics and ends up at the right CSO? So what we did, we white labeled our mobile identity solution, and they have onboarded and are still onboarding. By now, I think it's more than 100, and they are going into the 1,000 of CSOs, which receive an on-chain identity, which can be applied amongst the whole value chain. So you can actually start to track and trace the delivery of the goods and the distribution. So if it fails, you can start to create accountability where in the chain certain things break. You can never take out the human aspect, but you can create accountability, and that's a very important aspect. And a lot of these projects, they are live, they are running, but they're running a bit behind the scene due to actually the partners involved and some of the impact it creates.
I think you made a ton of interesting points there, particularly around identity. And it's ironic where we live in a world where, to your point earlier, it's decentralized and we think of it as blockchain is enabling a trustless system. And I think what I found working in the space for 2 years is that it's not about being trustless. It's about building infrastructure that allows more seamless interactions in that way that you're mentioning, right? Like the identity piece on chain, verifiable identity. I think that's what uh, I think that's where the industry is heading. And I think it's a good segue to the tokenization side of things because here in the US, we have tokenized assets. All of our assets are regulated out of the US and not fully, composable in DeFi. But I think where we've innovated is the idea of identity, where we've done it through an NFT. I know NFT, right? You probably heard the term. Everyone knows what that is. It's monkeys, it's penguin, it's all of these things. But what we use it for is this piece of on-chain identity, which I think is a great segue to the tokenization side, which you mentioned earlier is an overly used buzzword. Why is that?
Yes, thanks for asking, and I hope that we will get back to this because obviously I saw your eyes flashing when I mentioned it. It's very simple. Wherever I go, everybody's telling me about tokenization and how great it is, and that we can tokenize everything and we can issue everything. And technically speaking, that's true. Technically, we are there. That's not the bottleneck. But what people often like underestimate is the rights and the obligation with an asset. So what is with post trade? What is it with asset servicing? So tokenization is like the first step, but if you don't follow through the whole value chain, you don't solve any problem. And hence, for me, it's tokenization. Yes, I agree, it's super important, but please think it through. And this is where we see a lot of problems happen in the past and are still being explored now how to solve it. So, as an example as well here, right? The very first tokenized assets were like some fancy assets where we believed the industry believed like we can solve accessibility, but they never try to understand if there is a market for that as well, right? Is there a buy side? So I can try to sell whatever I want. If there's no buy side, good luck, right? And if I fractionalize something, but I cannot physically deliver if required, what's the real value, right? Sometimes it solves a problem, but sometimes it doesn't. So the question and what we have seen over time is how can you start to solve real problems and don't be too fancy but make it understandable again as well for the people who want to participate. And as an example here, what we did with the partner is a tokenized global reinsurance income fund. So if you think about reinsurance business, if you want to make a direct investment into reinsurance, The ticket sizes are multi-millions. It's all OTC. It's very complicated to participate. And together with our partner, MembersCap, Archex, and others, we built an tier one industry grade product, which uses Northern Trust, Coinbase Prime as custodians. So we had Archex, as I said before, and the product can be traded on the London Stock Exchange, DMI. So we have seen the first transaction last September on London Stock Exchange DMI on this very product on Cardano. And the beauty here is, if you think from an investor perspective, what are you looking at? You want to have something where you can diversify your portfolio. So this product is a reinsurance fund, as I said before, and you could select actually the scenarios like floodings and all these catastrophic covers, right? So what it means is it does not correlate with equity, fixed income, crypto, commodities, you name it, right? So you have an uncorrelated product you did not have access in the past. Now, due to tokenizing, the minimum ticket size has been reduced to 50,000 US dollar for qualified investors, and you have an estimated return of 10 to 12%. So this closes a gap in a traditional portfolio where you didn't have access to, or just a limited amount of people had access to. And based on an example like this, we see much more assets now coming into the play, solving a problem on the sell side and the buy side, and bridging it into the real world. And this is something we have lacked a bit in the past. And also, I think the promises, let's call it like this. So when you think about it, we often promised ownership on real estate. We heavily believe that real estate is a huge market, but we have to be careful of on what is being promised, right? Do you really co-own a building? Are you in the register with your name or not? So there are a lot of questions which are much more complicated than they initially seem to be. And now we suddenly see projects coming and have products also listed in Europe again, where they can invest into, well, it's through a UK-based company, but actually it invests in an MBA team in the US, obviously. And what they do is actually they have the ownership of the VIP area and the lounges on an MBA stadium, and you can purchase a piece of it where you can benefit from the rent income. And then there are other aspects of the stadium. So you can start to participate and create an additional income, but you are not promised that you own the stadium because you do not own the stadium, right? So I think it's this way how it is being promised. And maybe getting back to your identity piece, it's also identity can be so many things. As you said, you can use an NFT as an identity. ADA is an identity for me as well, because if I purchase an ADA, I can participate in governance. So it gives me access into governance actions. I can vote, I can participate. Then the question is, which identity is accepted depending on the use case, right? So for governance, ADA is fine. If I want to prove my age or my nationality, neither an NFT nor an ADA will help me anywhere because it's not issued by a government. So there we need to have this EID solution. So there is like, depending on the use case, we see to understand who we need to work with to actually plug in with the right APIs as well.
Yeah, and you said so many good things there, and I think if I had to break it down, you talked a lot about access, and I couldn't agree more. I think access is really important, and you think of why we bring anything on chain, why are we tokenizing any asset, any fund, any of these exposures. It's really about access. To your point, lowering the check size for some folks, or even from a distribution standpoint, right? Accessing geographies that one normally wouldn't be able to. And I think too, you mentioned reinsurance, you mentioned suite ownership or partial ownership in stadium suites. Hopefully Cardano owns a suite one day and Villia and I get invited. But I think that's super interesting because these are assets that never before can anyone access, and now you're making it a little bit more accessible in a way that um, you're seeing more esoteric assets, right? Not just equities and fixed income assets come on chain. You're seeing a broad set of it. And then I think the third point is you mentioned challenges, right? So we talked about identity. You talked about, you mentioned liquidity. You mentioned kind of that off chain, on chain component and the regulation around it. what do you think are the top challenges when it comes to tokenization as a whole? And is it by industry, I guess, or not industry, but by asset class?
Yeah, it's heavily driven by asset class. So if you think about, let's say, traditional equities, stocks, there are a lot of reporting requirements, as an example. So the messaging is a challenge there. How do you comply with trade depositories, with shareholder right directives, a lot of things which are fully embedded in traditional value chain through the CSDs. And if you tokenize it aside of the CSD, how do you comply with these requirements? So this is where we see also Euroclear, again DTCC, but also in Switzerland 6 and all the others are being heavily involved now, and also Swift under ISO 20022. We need to kind of find a global framework and the harmonization of these standards to allow it to being interoperable with blockchain and also public infrastructure. The other thing then again is the understanding of what tokenization is, because you can tokenize a native asset or you can wrap a native asset, and that's what we see quite often. We see a lot of wrappers, right? And that's also coming from the traditional world where you wrap an asset and then you sell it as something it isn't. So I think we just need to be very clear and transparent of what does an asset represent and what benefits you're gonna get out of it. So this is, I think, the transparency is another crucial aspect, and then probably the intersection of DeFi and TradFi, because we always try to leverage the DeFi aspect onto a certain extent, but as it is from a regulatory perspective not yet fully understood, it creates some frictions. And maybe I can give you an example how this could work or how this does work actually. When we speak about something simple as staking, right? So if you want to introduce staking into an asset, the question comes, how does staking work? And there's often this misconception that staking equals staking. So every staking infrastructure is the same, and that's not the case. So that's a big problem. And Cardano, as an example, how we are built, it's natively on the protocol. You can stake without these common problems of losing control, losing liquidity, having slashing or locking periods, which allows us to have either tokenized assets, which contribute to staking, or in the traditional world, also to bridge this, maybe this we do with the UNHCR, the United Nations High Commissioner for Refugees. We created an impact staked ETP. So we have an ETP, an exchange traded product, where you can invest with fiat. 100% of it is being invested into ADA, so you can participate in Cardano, and 100% of the underlying is staked. And it can be staked due to our architecture. So that's very important to highlight here because it's not everywhere the same. And the staking rewards now are configured that they are being paid directly to the UNHCR. So you can contribute to corporate social responsibility through an investment vehicle where you keep full control of your initial investment and liquidity. So if there is like a disaster or just anything happens where you need to withdraw your money and you want to have liquidity back, you can sell the product and you can also have fiat, or you can keep it on your balance sheet. But the future rewards are being directed to the UNHCR, which gives them more planning security. They have a regular income, and you have a CSR contribution. This is something which is amazing, which we could not do in the past. And now, thanks to the merge of DeFi and TradFi, you suddenly can do this. But it requires a lot of education with the regulators and the philanthropists, the CSR, ESG departments, and so on, to understand how it works and how it's compliant in today's industry. So this is something we have to put a lot of work into it, and why also podcasts like this are truly important and appreciated, because it helps to create a bit better clarity of on how the technology works and how it benefits society.
Thank you very much. And yes, you're making very good points to illustrate how Cardano, ADA, the staking capability is actually the true benefit to individuals who need this benefit. But now, going back to Cardano, 5 years from now, what would success look like for you?
Yeah, I think what I said a bit earlier, 5 years from now, blockchain becomes valuable when it's part of the infrastructure, like the internet does today. So we probably don't speak about blockchain as a fancy technology, but it's just in our day-to-day usage, like it is, as you mentioned, with the SPAR use case. I pay and it works and I don't question it.
Brilliant, and that's a great point to end on. Thank you so much for the great discussion today.
Davil, Vin, thank you very much. It was a great pleasure, and happy to come back. Thank you so much.
Thank you.
Absolutely. To clarify, the views and opinions expressed in this podcast are those of WisdomTree and Cardano Foundation and are subject to change. Anything we present in this podcast is not intended to be relied upon as a forecast, research, nor as investment or tax advice. The information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell any securities, and reliance upon them is at the sole discretion of the listener. Please remember, past performance is no indication of future results.